How the Bitcoin halving could impact the market in 2025. The Bitcoin halving is one of the most anticipated events in the cryptocurrency space, and in 2025, it's expected to have profound consequences on the market. Occurring roughly every 4 years, halving reduces the rewards miners receive for adding new blocks to the blockchain, effectively cutting the supply of new Bitcoins entering circulation. Before we get started, subscribe to our channel and turn on the notification bell so you never miss our latest content. The supply shock theory and its implications. The most fundamental impact of a halving is the reduction of the new supply of Bitcoin. When the reward for mining a block is cut in half, the daily issuance of new Bitcoins drops significantly. This tightening supply is expected to create a supply shock, especially if demand remains constant or increases. In economic theory, when supply shrinks and demand remains steady, prices tend to rise. Historical halvings have proven this concept, with massive price surges in the year following the event. For instance, in 2012 and 2016, Bitcoin's price multiplied several times in the 12 to 18 months following halving. The same trend was seen after the 2020 halving. In 2025, if demand from institutions, ETFs, and global investors continues growing, a reduced supply may fuel another rally. Mining profitability and the hash rate rebalancing. Bitcoin miners are crucial to network security and operation. When the block reward is halved, their profitability takes a direct hit unless the price of Bitcoin rises accordingly. If profits dip too low, smaller or inefficient miners may shut down operations, leading to a temporary drop in hash rate, the total computing power securing the network. This shift can affect network speed and stability until difficulty adjusts. In 2025, we might witness a migration of mining operations to cheaper energy zones and an industry-wide upgrade to more energy-efficient hardware. It could also drive consolidation, with large-scale miners acquiring smaller competitors to maintain their economies of scale. A temporary drop in hash rate can cause short-term market uncertainty, potentially impacting Bitcoin's price volatility in the months post-halving. Retail investor FOMO and market psychology. Another key factor in the halving aftermath is FOMO, fear of missing out, among retail investors. Historically, halving events generate widespread media coverage and social buzz, making Bitcoin more visible to everyday investors. This psychological trigger can lead to a wave of new entrants eager to capitalize on the potential bull run. In 2025, social media platforms like X, formerly Twitter, TikTok, and YouTube will likely be flooded with hype around price predictions and success stories. When combined with reduced supply and increasing demand, this can accelerate price momentum. However, such emotional trading behavior can also lead to volatility, with sudden market corrections and panic selling. Still, the retail wave often sustains a prolonged bull market phase before eventual consolidation. Institutional adoption and ETF inflows. Institutional participation has drastically evolved since the 2020 halving. With the approval of multiple Bitcoin ETFs and broader regulatory clarity, institutions now have more vehicles to enter the market. In 2025, we could see massive ETF inflows around the halving period, especially if past trends repeat. These funds tend to accumulate Bitcoin in anticipation of reduced future supply and expected price appreciation. Moreover, institutions prefer long-term holdings, which removes more Bitcoin from active trading circulation, adding to scarcity. If macroeconomic conditions favor risk assets, we may witness institutional capital rotating into Bitcoin as a hedge against fiat inflation and a store of value. With custody services maturing and regulatory compliance improving, the 2025 halving could be the biggest institutional moment in Bitcoin history. Altcoin season and market rotation. Bitcoin halvings don't just affect Bitcoin, they ripple across the broader cryptocurrency market. Historically, strong Bitcoin rallies are followed by altcoin surges, often referred to as altcoin seasons. Once Bitcoin consolidates or stabilizes at a high level, investors typically rotate profits into promising altcoins, chasing higher returns. In 2025, after the halving, we could see a wave of capital moving into ecosystems like Ethereum, Solana, Avalanche, and other Layer 1s, as well as emerging DeFi, AI, and GameFi tokens. This period often fuels explosive growth in smaller projects. Halving induced momentum (ACTS) as a catalyst for the entire market's growth. However, timing is key. Altcoin runs usually trail Bitcoin's peak by a few weeks or months, so smart investors plan accordingly. Media attention and public awareness. With each halving, global media outlets renew their coverage of Bitcoin. This coverage boosts public interest, awareness, and adoption. Mainstream news, finance sites, and influencers begin highlighting price movements, expert opinions, and new records. In 2025, this phenomenon could be bigger than ever, with a convergence of financial media and social networks amplifying Bitcoin's reach. News cycles will likely focus on Bitcoin's scarcity, halving impact, and billion-dollar gains, drawing in curious newcomers. Long-term price predictions and market sentiment. Post-halving, speculation about future price targets becomes rampant. Analysts and influencers begin projecting targets ranging from $100,000 to even $500,000 per Bitcoin. While not all predictions come true, this optimism fuels bullish sentiment, encouraging long-term holding. In 2025, halving-driven sentiment may overlap with broader tech optimism and macro shifts like fiat devaluation, making Bitcoin seem like a safe haven. Market sentiment plays a massive role in price action. If a majority believe a bull run is coming, it often becomes a self-fulfilling prophecy. Regulatory impact and government responses. Every bull market sparks increased scrutiny from governments. In 2025, Bitcoin's halving could once again draw attention from regulators. Concerns may center around capital gains, tax compliance, and the environmental impact of mining. However, there is also growing recognition of Bitcoin as a legitimate asset. Regulatory frameworks might evolve to support innovation while protecting consumers. Network upgrades and technological innovation. Bitcoin halvings often encourage technological upgrades across the ecosystem. To stay profitable, miners adopt more efficient hardware, and developers push for protocol improvements. In 2025, innovations like Layer 2 solutions, e.g., Lightning Network, scalability upgrades, and privacy enhancements may become more mainstream. This boosts Bitcoin's utility as both a store of value and a transactional currency. What cryptocurrencies to watch in 2025 post-halving? While Bitcoin remains the centerpiece of any halving discussion, several other cryptocurrencies are poised to benefit from the event's ripple effect. Ethereum may surge due to rising DeFi and staking participation. Solana and Avalanche could ride the altcoin wave with improved speed and utility. If you enjoyed this video, give it a thumbs up and subscribe for more content. Hit the notification bell to stay updated with our latest video. Share your thoughts in the comments below. Thank you for watching.